Okay, so equity research, they see there are seven or there are 8,000 companies listed in the market. So what is equity research? Equity research means you are analyzing all the company on the parameter of quality and on the parameter of quantitative. Quality means what company exactly do, how well is the management, what are the company ethics. So on the qualitative view and quantitative view, what are the company profits, revenue, margin, all these things you will analyze. This is called as a equity research. Okay, after doing equity research, you will you will analyze the valuation of a company. Okay, so once you do complete the equity research, you will evaluate those company on the, you will forecast the company stock price. Okay, so there are some models. We will understand what are these model, and we will calculate these valuation part. So see, if you see here, these are the steps involved. Firstly, you will select the economy. Firstly, you will do economy analysis. There are 200 something countries in the world. India is the fastest growing economy when it comes as a GDP growth. We are growing at a 7.5% GDP annually. So you have chosen the economy. Okay, let's say you want to invest in Indian economy. So there are economy analysis. Firstly, we do the economy analysis. We want to invest in which country? Is India, China, or where? USA. So India is a fastest growing economy. We have a lots of opportunity inside our country only. So you do not need to go outside our country. Okay. So then it's come after choosing your economy, you will do the sector and industry analysis. Sector is a broader term. Industry is a narrower term. We will see in later on. So once you identify the sector, that this sector is fastest growing sector, and under this sector, these are the industry I want to invest my capital. Then you will do a company analysis. Okay, so you will do company analysis among the competitors, which there are hundreds of company in the same sector. So in which company you want to invest your money, that comes in the company analysis. Okay, so we will see this company analysis part in a detail. After doing these three things, economy, sector, industry, and company, you will do the financial statement analysis of a company. In the financial statement, we'll do the profit and loss statement, balance sheet statement, and finally we'll see the cash flow statement. After doing this financial statement analysis, we will do the financial modeling on a particular company. So in this course, I will take an example of, let's say, HUL. So we'll do all these things, all the financial modeling of a Nestle, because it is not possible to do apply this financial modeling for all the companies. And after that, what equity research analysts do, it simply write a report and it say whether to buy or sell based on its intrinsic value. Okay. So these all things we are going to do in upcoming lecture. Profit and loss, balance sheet, cash flow, ratio analysis. We'll do all these things in a later on part. Okay. So these are the qualitative analysis. We'll see all these question in qualitative part. Okay. So I hope it's clear for as of now. Let's okay. So okay. Next part. Once you understand the what is equity research. Okay. So let's do, let me change my slide. So there are two way to do the equity research and analysis. Okay. Just I want to inform you that this first class may seem you that it's boring, but it is very, very, very important before you invest your money, because it's your money. You have to do you have to do research. You have to do all these analysis. Then only in the market correction phase you will not get panic. You will take it as an opportunity. You will understand how market actually drive. Okay, so just absorb these things whatever I am telling you, and analyze those things. So there are two way of doing a research. Top down approach, first you choose the economy. Let's say I want to invest in Indian economy because it is the fastest growing economy in the world. Then after choosing the economy, I will do the sector, in which sector I will invest my money, and then in which industry, and then in which company. This is a top-down approach. And in this bottom-up approach, what we do, we firstly choose the company. Means as an investor, I will analyze all the company financial statement. So after analyzing all the company financial statement, I will choose one company, then I will go to industry, sector, and economy. So this is a bottom-up approach. Okay, so now let's understand what comes in the economy analysis, because then you will trust your investment. Okay, in the economy, these are the 12 or 13 indicators you should watch if you are investing your money. If you are investing in Indian economy, you should watch all these factors. So let me explain you one by one all these factors. What are they mean? Okay. So, okay. So in economy indicator, let's first understand the GDP growth rate. Okay. So can anyone tell me, I know you all of you are investor, can anyone tell me what is the GDP of Indian economy? What is its growth rate and what is current GDP we have? Because then you will understand how much opportunity we are having in the Indian economy. So can anyone tell me what is the current GDP of India? 7.8. No, that is a growth. Okay, 7.8 we have received in this quarter. But I want to know what is the total GDP. Okay, okay. So let me tell you, currently we are having 370 lakh crore GDP. Okay. And if I talk about what is the market cap of all the listed company in India, it is 470 lakh crore. So you can see that we are having 370 lakh crore GDP and we are having 470 lakh crore market cap. So generally it is around 1.2 times of GDP. Okay. So I'm talking about okay, it is around 3.7. Okay, so it is around 1.2x, means currently GDP is driving the market cap. Okay, in every 6 to 7 years, our GDP got double. Okay, so if I talk about in 2031 or 32, our GDP will be around 9 lakh crore, 900 lakh crore. So you can see there are so much wealth that is going to create in India. Okay, so there are around 400 lakh crore of wealth that will be created inside the India. Okay, so now which sector or which industry will get this benefited from this wealth creation, that we need to identify. So our GDP is the fifth largest GDP in the world today, and we are going to become third largest GDP by 2030, and most probably we will be the second largest GDP by 2047. Okay, so this is our Indian government target that they have set with us. And if you see that our GDP growth is around 7 to 8%, you can see. So we can achieve these target. And when our GDP will be 900 lakh crore by 2031-32, our market cap will be more than this. So you can see all these companies or sector industries going to growth. So we can say in terms of growth rate and GDP, Indian economy is currently doing better and better. Okay, so so if you invest in India or in any sector, you should have trust or belief in the Indian economy. If market corrects, you should not worry. If you have chosen a good sector, good industry, and good company, you should not worry, because in the long term, our market cap is going to increase. And if I talk to you about USA GDP and market cap is double. The ratio is double. USA GDP is around 30 billion. Okay, and its market cap is around, sorry, 30 to 60. Okay, so this ratio is 2. And if I talk about China, its ratio is less than 1. So it means Chinese market is currently at a cheaper rate and USA market is currently at a much higher cost, because GDP to market cap ratio of a economy you should always see. So any doubt till here? So why I am telling you, I'm just telling you to have trust in the GDP growth in the Indian economy. So now let's see the second factor is the inflation. Okay, inflation is in India. can anyone tell me we are a high inflationary economy or lower inflationary economy or moderate inflationary economy? Okay. We are high. No, we are not a high inflationary economy. If I talk about the Venezuela, it is a high, very much high inflationary economy. Okay, Venezuela inflation is generally in the four, sometime it is to 4 to 5 digit. And if I talk about Venezuela, it is having the highest oil reserve. Okay, but their people are poor because of the inflation. Higher inflation is also not good, and lower inflation is, let's say, Japan. Sometimes they are in deflation. Okay, currently they are. I think last 1 year they have come out from the deflation, but very lower inflation is also not good. But in India is having a moderate inflation. GDP is also highest, inflation is moderate inflation. Currently, our inflation is less than 2%. So RBI definitely is going to reduce the inflation, reduce the interest rate, and will try to increase the inflation, because low inflation is also not good. In low inflation, it means people are not expanding, people consumption rate has decreased. Okay, so low inflation is also not good. High inflation is also not good. We are a moderate inflation economy. That is a very good for the economy. Next is the GST number. GST number is basically all goods and service tax. Okay, so these numbers are generally published month on month. I will tell you the website, how, on which website you can see all these numbers. Okay, so GST numbers generally published month on month basis. More the GST number, more is a good sign of the economy. Okay, next is IIP index. It is index. It means what is the manufacturing sector growth, electricity. Okay, this is a total production. So more IIP index, more is the better. So if you see that electricity IIP index, and you see the more electricity consumption, so it means this is a good sign of the economy. I hope you are understanding these things. Okay. So next is unemployment rate. Unemployment rate is generally not good. Uh, and this unemployment rate, market react on the unemployment rate data in the USA, Europe, and India. If you see that we are having a unorganized sector that we do not count in the unemployment rate, but market definitely react on unemployment rate. More than unemployment rate, it's not good for the economy, because uh, if unemployed people are more jobless, they will not going to spend their money in the economy. Mutual fund inflow and outflow, more inflow of the mutual fund, more is a good for economy. If you see that currently we are having 30,000 crore of SIP every month, it has significantly increases from the 2020. So it means people are trusting their economy. More Indians is trusting their economy that it is going to grow. So it is good for the domestic investor, and FII also see this data that yes, Indian are investing their money in the mutual fund. So they are trusting their economy. They have a good hope that India, it is going to be rewarded. Okay. So now let's see import and export. This is a very important import and export. And currently, if you see that tariff war is rotating around this only, trade deficit, trade surplus. But this is a negative for Indian economy, that we are in a trade deficit economy. We are not a trade surplus. Can anyone tell me why we are in a trade deficit? I'm telling you the long-term picture of India. What can be the long-term picture? So can anyone tell me why we are in the trade deficit? What is the main contributor that we are in the trade deficit? Okay. Okay, let me check. Can anyone tell me if you have answer? Please let me know. Okay, so let me tell you, because of the crude oil, we are importing crude oil. Yeah, correct. We are importing crude oil because we are having the largest population. So we are importing crude oil for our population, for our transportation, and that is why we are in a trade deficit. Now listen me carefully. Now we are in trade deficit, but there will be a day come in our country that we will be in trade surplus, because you see Indian government is currently focusing on green energy. Okay, we are reducing our dependency on the fossil fuels, we are reducing our dependency on the crude oil. We are importing 40-45 billion dollar of crude oil, and we are buying in dollar also. Okay, if dollar appreciate, we have to invest more, we have to pay more and more money. So this is a very negative for our economy. But one day we will be, our Indian government is focusing on the green energy. We will export our green energy outside India. So then once this crude oil import will comes zero, we'll start exporting green energy, and then we will definitely comes in the trade surplus. So this import and export, currently we are in the deficit part, but if you see that government is focusing on renewable energy, green hydrogen, green sector, because government wants to reduce the crude oil dependency, and ethanol blending is also the part of that scheme only, because government do not want to buy more and more crude oils after 20-25 years. So this, if you see the clear picture of Indian economy, so this import and export imbalance, because we are importing more and exporting less, so this is the main reason our per capita income is also very less. So government is supporting green energy, renewable energy sector, ethanol blending, all these sector. If you see electric vehicle, okay, all these sectors after 20 to 25 years, if I see a clear picture, we will be definitely on a good path. Exchange rate currently dollar has reached around 90 rupees. Okay, our currency appreciation, currency depreciation is definitely not good for the market. You see that currently we are paying 90 rupees to buy $1. Okay, so we have to pay more and more rupees to buy crude oil. So this is not good. If rupees depreciate, it is overall impacting the Indian economy. Okay, if you see that, it is good for the exporting sector, it is good for the, we are exporting pharma, it is good for them, because when we export, they give us dollar. Okay, when we convert this dollar into rupees, if rupees depreciating, they get more and more money. IT sector is definitely getting benefit. If you see last 1 or 2 days, mid cap IT sector and those IT companies who are exporting their services in the USA, they were in green. They were getting returns, because they know that if this rupees depreciate, they will get more and more money. So that is why rupee depreciation is good for the export sector, pharma sector it is good, agriculture sector it is good, IT services rupee depreciation is good, but we are not a trade surplus country. Overall, it is negative for our Indian economy, because we are in a trade deficit. We import more and more, so we have to pay more and more if our rupee depreciate. Oil price is directly connected with the Indian economy. More oil price, more we have to pay more, and we also increase our petrol diesel price in country, and overall inflation will increase by increasing the oil price. Okay, so this is a one more important factor to see the Indian indicators. The interest rate. This is one of the very, very, very important factor. If you want to understand the market, interest rate is very important. Market is purely driven by these indicators. There is nothing more. If you see these indicators clearly, you can identify where the market will go. Okay, now if I tell you this interest rate, currently our interest rate is reduced by 25 basis point on the last Friday. Market react around 1 to 2%. Okay, sorry, 1%, more than 1% market has reacted in green, because we have reduced by 0.25%. Okay, currently it is 5.25 basis point repo rate. In 2020, if you see what happened, why market has make a new high, because in 2020, in the COVID time, uh, economy got slowed down, and government started printing more and more money to support the sector. So government, it is at the lowest level of interest rate, around 4%. Okay, can you imagine 4% interest rate? This interest rate significantly reduces during COVID. So when this interest rate reduces, there is a huge amount of liquidity in the market. $20 billion government spends on those sector to support them. Okay, so this liquid, once this liquidity comes, there is very less interest rate on loan. People started taking loan and invested these money into the market. Suddenly liquidity rises and market was making new high again every day. Okay, economy was not moving, but because of this interest rate, market make a new high because of the liquidity. And currently, if you see the way we are having a interest rate, low interest rate, sorry, we are having a low inflation and highest GDP growth rate. So again, RBI may decrease the interest rate. So there is a chances that huge amount of liquidity can come into the Indian market. Not same as a COVID, but there can be significant amount of liquidity RBI can put into the Indian market so that they can increase the inflation. Okay, once in okay. So what happened? When RBI put liquidity in the market, suddenly inflation rises. It takes 1 or 2 years. After 1 or 2 years, inflation rises and they increase the interest rate got peak. Okay. Once interest rate at the peak, they again reduces the interest rate. This is a cycle that keeps on happening. So in 2022, why market has not given return? Because our interest rate was at peak. Government uh, absorb government started reducing the interest rate. Once they reduce the interest rate, there is a liquidity comes from there is a liquidity that comes back into the bank. There is a liquidity that market sorry, government started reducing the liquidity in the market and people started investing in the safer asset classes. This interest rate is very important. So focus on the RBI interest rate decision. I am expecting that they will decrease this interest rate and they will put the liquidity in the market. So this is a positive for the market. So I would request to this class will end around in 30 minutes. So please join the class on the same link. Okay, so if it got ended, please join from by the same link. And this mutual fund inflow we have already understand. So I hope you understand all these parameters. Okay, so can anyone tell me what you understand from this? If you have any kind of doubt, please ask through chat also. So I hope you understood all these parameters now. Okay, Indian indicators, sorry, economy indicators. So if you understand all these things, we can move forward. So after understanding the economy, let's understand the sector and industry. In which sector you will invest your money? Okay, there are total, if you see, there are total 10 sector across international, not in India. There are 10 sector, okay, classified. You can classify any company in these 10 sector. Sector is a broader term, you can say. Industry is a narrower term. So there are total 10 sector: material and processing, consumer discretionary, consumer staples, energy, financial service, healthcare, industry and producer, technology, telecommunication, and utility. So in this sector, these industries are comes, you can see. So a company who is producing cement, metal, paper, mining company, it comes under the basic material and processing. Okay. Before uh, before going into the sector analysis, I want to show you on which website you can find these economy indicator. Okay. So there is a website called, there is a website called Center for Monetary Indian Economy. Okay, from this website you can find all these data. Let me open this website and show you. You can write this website, Center for Economy, Indian Economy. Okay, so from this website you can get all these data free of cost. Okay, so let me share my screen now. So this is a website, Center for Monetary Indian Economy. So from this website, you can see what is the unemployment rate, what is the consumers consumption sentiment, consumer expectation. You see that there are lots of data in this website. You can read out all these data. You will get all the economy indicator. So this is one website that I want to share with you, and another website that is also very important, and that is called Trading Economics. So these two websites, whenever you do economy analysis, how our economy is doing. So this is the second website, Trading Economics.
I want to ask one thing. There is a in the reports they said that there is a GDP forecast 6.8.
Yeah.
So how do you see that? Like if it is
Okay.
GDP is like estimated like increase, no?
Yeah, yeah.
So it is good for the this thing, no? Market.
Yeah, yeah, good, good. So I'll explain this, okay? Got it. So second website is Trading Economics. So from this Trading Economics, you can get what is GDP growth rate. Okay, so all these things you will get here, and you can say if you go to in the GDP part, so you can get labor means what is unemployment rate, money terms. Okay, you can see in the trade, import and export, everything you can see of all the countries, all the 200 countries, you can get the detail from here, government, business. Okay, so if you go to the country, in this country there are so many countries listed, all the countries mostly. So you can select any of the country, and in the forecast you can see index, currency, indicators, countries. So this is a good website. Please read this website. All the indicators you will find here. Okay, so let's jump to the sector and industry analysis. So yeah, that 6.8% GDP is good, and it is better than the estimation. So it is good for the economy. Okay, so it is not that market will react on the same day or next day, but overall, if you see on the longer term, GDP growth rate is good. Have you ever think about why generally Nifty 50 or uh, most blue chip stocks or SIPs give you around 14-50% return only? It is because if you see that our Indian GDP generally grow around 7%, and we have inflation around 5 to 6%. So if you add these two terms, 6, 7 plus 6, it comes around 13 plus minus 1. Okay, so GDP plus inflation. Okay, if you add these two terms, this is a return that we get from the market, from the Nifty 50 topmost companies of our country, because these companies grow at this 12 to 13% rate only in the longer period. So market is completely driven by GDP and inflation. If our Indian GDP start growing at a 10%, so all the mutual fund, all the Nifty 50s company will grow around 17 or 80%. Then we will get this return 17 or 18%. So it is purely based on the GDP, purely based on the economics. Market is purely based on the economics. Once you understand this factor, you will never ever get panic into the market. Your SIP is going down, up on the daily basis, doesn't matter. Our GDP is growing at a 7.5%. So market will catch up this sooner or later. Okay, I told you that in 2031, 32, our GDP will be around 900 lakh crore. So market cap will definitely catch up this. Okay, so currently we are at 1.2x. Okay, our
But
GDP is
usually it
37.
doesn't happen.
Yeah.
Like if the GDP is growing by 6% and the inflation is there is 3 to 4%, we don't get the return of 10% in the market as it happened this year also.
Mhm.
Like most of the investors actually did not get that return.
Yeah,
Like
yeah. You are you are talking about in a shorter term, shorter period, you will not get this return because market have so many information, trade imbalances going on, trade tariffs is going on. But in the longer period, this is the market. If you see the last 20 years Nifty return, it can be plus 30% in 1 year, minus 25% in second year, but it will catch up soon. So overall average return will be around 12 to 13% because our GDP plus inflation is growing on this rate only. So
what
if,
should be the horizon of investment for that purpose?
yeah, your
I mean, the longevity of the investment.
Yeah, it should be minimum 15 years if you see on the basis of past history, minimum 15 years if you see. So your average annual CAGR can be around 14-15%. And it can be more
But
if we
normally the investors don't have that kind of patience to keep the money for say 10, 15 years.
yeah, then
They
yeah, but it is a it is your money and you are taking risk, so you have to be patient in the market. You have to be a long-term investor. Okay, so
okay.
yeah, you have to be long-term investor if you want to really make your money, want to grow your money. So I'm talking about the top 50 companies of our country. So let's say if you have selected a different stock or company from your analysis, then it can grow much higher
Correct.
return. Okay, so
Correct or much lower than
yeah, I'm talking about our Indian economy. If you simply invest your money in Nifty 50 or some mutual fund, you will easily get this return 14-15%. But as a research analyst on valuation, we'll identify our own company, identify our own stock that can give you a good return. Okay, so let's now see the sector and industry classification. So there are total 10 sector across the world. So currently in NSE, BSE, both exchange you will find this sector. So how you will find, you can just simply go to the money control website. Okay, so let me share how you can identify sector. You don't need to do manually. You can simply go to the website. Okay, so I hope my screen is now visible to you. So let's say if you search here Nestle India, it comes under which sector and which industry. Okay, so if you search here Nestle Limited, here in the basic industry, if you click here, so you can see that this comes under the fastest moving this is a sector fastest moving consumer goods, and industry is a food products. It comes under the food product industry, and it comes under the fastest moving sector. Okay, so if so you can see that companies who are making cement comes under the material process. Companies who are making auto, hotel, restaurant